back to those tech earnings that Emily just highlighted, because we've got Google parent company Alphabet under pressure after reporting Q1 earnings last night. The company posted revenue growth of 23%, the slowest growth rate since 2020. It also missed analyst sales forecasts on YouTube for the third straight quarter. Let's bring in Mandeep Singh. He is Bloomberg Intelligence senior analyst. Mandeep, what stood out to you in the numbers that we got yesterday? If you look at some of the slower growth in ad revenue, it does feel like we're sort of seeing this in Google's peers too. We saw it with Snap. A lot of people expecting that with Meta after the bell today.
Yeah, look, I think search continues to be strong. And part of the reason why, search is doing so well is because Alphabet's or Google's exposure to ad is more broad-based in terms of industries. So it's travel, really robust, and that's where ad spending is going up. But then when you think about e-commerce ad spending, that is the one that is really declining here, and that will hurt the likes of Meta and Snap more than Alphabet. In the case of YouTube, the comps were much tougher. So our view is, look, everybody on the streaming side is seeing that headwind from reopenings. So it's less engagement and time spent on streaming platforms. We saw that even with Netflix results, right? And so YouTube is having some of that impact. I don't think they're losing share here to TikTok or anything like that. It's just a function of reopenings and how people are spending less time. But net, I do think YouTube will have more subscription revenue. So even though ad revenue took a hit and decelerated, the premium subscribers are actually growing up, and that part of the business is accelerating. So when you look at YouTube as an aggregate business, it's still doing very well compared to all the other streaming platforms.
On YouTube, how much of that revenue miss can we peg to what's been playing out between Russia and Ukraine? We heard CFO Ruth Porat yesterday say there was an outsized impact. Is that what you've seen?
Yeah, so it's low single-digit portion of the revenue. Obviously, the suspended operations in Russia and YouTube had the most exposure compared to the search and some of their other businesses. So that's a one-time impact, and it will obviously linger on until they resume the operations. But look, as I said, when you think about YouTube, it is a source of, premium subscribers. So when you start off with a freemium ad model, you get a lot of subscribers who consume YouTube free, and then they convert to premium subscriptions. And that is a very healthy pipeline, because a company like Netflix has to spend a lot of money upfront to gain subscribers. YouTube doesn't have to do that. They have that premium ad tier, and I think that positions them better than somebody like Netflix for the near term, at least.
We're starting to hear a lot more about TikTok on these earnings calls. I'm thinking back to the Meta call from last quarter. We heard about it last night on this call for Alphabet. How big of a threat does TikTok pose to YouTube, especially when they're trying to make gains through YouTube Shorts?
Yeah, so YouTube Shorts, again, we don't know how much it contributes to the overall top line for YouTube, but what they shared is the engagement is growing. And look, TikTok is definitely doing very well when it comes to that younger demographic, the 18-year-olds, 18 to 25-year-olds. But YouTube has a much broader base. And I think that is where the younger folks can move from Snapchat to TikTok to Roblox. There's a lot of competition for that younger cohort, but YouTube definitely has a more stable audience. And I feel their premium subscribers is the number to watch out for. They don't break it down. It's lumped into Google other revenue, but that is the part of the business that will continue to do much better, especially since Netflix is raising prices. So some of those customers from Netflix could convert to YouTube customers, because YouTube has got a lot more to offer in terms of content.
Let's talk about the streaming space broadly, Mandeep. It feels like on the back of what we'd heard from Netflix, there's a lot of questions about, number one, whether the addressable market was overstated, whether investors just got kind of used to the numbers of the last few years when so many people were holed up at home consuming all of this content. Where do you think it should be? In other words, are we starting to see the peak? Have we hit a ceiling, saturation in this space? Or is this just about resetting the expectation after that incredible growth that we saw in this particular space over the last 2 years?
Yes, there's definitely a pull forward that happened or during the pandemic, and which is why the numbers look great in the last 2 years, and now you have much tougher comps. But look, this is a secular growth market. The difference is for a company like Netflix, they're spending a lot on acquiring content. So that eats into their gross margin. And now, they will have to curtail that spend to really maintain their margin targets. For a company like YouTube that has a lot of user-generated content, that's high gross margin. Yes, they spend a lot on content and they share the revenues with the creators, but that's still a higher gross margin business. And look, with YouTube, the fact that they have this freemium ad tier as well as subscriptions, that really puts them in a solid position to raise the ARPU. Whereas with Netflix, the ARPU is capped at that subscription, monthly subscription. And now that they're raising prices, it's leading to higher churn. So YouTube doesn't have that problem because even if somebody drops out of premium subscription, they're still a premium ad customer. And so that is where the model is far better when you have a combination of ads and subscriptions as opposed to just subscription.
And finally, Mandeep, going to other Alphabet's other businesses, the cloud has been a real bright spot for the company. We saw growth in that space yet again, and yet it is still well behind competitors like AWS as well as Microsoft's Azure. Where do you see the biggest opportunities for Google Cloud? Where are they going to make the gains?
Yeah, so it's all about getting more enterprise customers, and that's where they are competing with both Microsoft and Amazon. I think the Mandeep acquisition, if it goes through, and the chances are it will go through, will certainly help beef up their security so they can compete with Azure more, because Microsoft does sell bundled security and Office along with their Azure infrastructure suite. So I think, and this market, cloud market, is large enough to accommodate all three customers growing at, 30-40% over the next 2 to 3 years. So clearly that has helped Alphabet diversify their revenue from just consumer tech to now enterprise IT spending, and they will continue to gain share. I don't think they're going to become number one or number two anytime soon, but as I said, this market is a high growth market and a secular growth story which will help Alphabet.
Yeah, it's certainly enough to go around with so many companies making that digital transition. Mandeep Singh, good to have you on the show today. Bloomberg Intelligence Senior Analyst.